Hello, this is Jordan, and this video is being recorded on the afternoon of Wednesday, July 10th, 2019, and I'm going to discuss why silver has been lagging. But first, let's take a look at the technicals of silver, and at the bottom there we have its net spec position as a percentage of open interest, which comes in around 23.5% currently. Now, above, you can see we have a daily line chart of silver with the 400-day moving average, and silver has failed to break above the 400-day moving average a total of 8 times since the fourth quarter of 2017. So obviously, if it were to break above that moving average, which is currently about 1560, breaking above it would be significant. And there's a little bit of resistance at 16, but in the scenario that silver is able to break above the 400-day and break above 16, the next target would be in the mid-18s. I see that as the next confluence of resistance, and perhaps that would coincide with gold at 1500 or gold a little bit higher than that. Now, to answer the question that I posed at the beginning of the video, why silver has been lagging, first, let's understand that silver is, in my opinion, it's like 50% a currency and it's 50% a commodity. Now, gold's a currency that moves on monetary factors. So if silver is only 50% of that, then it's not going to follow gold and correlate perfectly all the time. So if silver is also 50% a commodity, then it's also driven by things that drive commodities, which is rising inflation expectations, dollar weakness. Now, this recent move that we've seen in gold, it's been driven by rate cuts and economic weakness. Inflation expectations have been falling. So it's been driven by things that are not that bullish for silver. But nevertheless, silver has moved a little bit because gold's moved a lot. And silver, like I said, if you think of it as 50% a currency, it makes sense. And also, we should factor in the dollar hasn't declined that much. A real decline hasn't quite gotten underway. Maybe it will over the weeks ahead. Now, for silver, what we want to see for it to get going, aside from continued strength in gold, is a steepening yield curve, which we plot there at the bottom, 10s and 2s. But the curve is steepening because yields are rising, and that would signal that inflation expectations are rising. Now, you can get a rising yield curve because yields are plunging, and the short-term yield is really plunging because the Fed is cutting aggressively. But you can also get a steepening yield curve because the Fed cuts a couple times, and then they stop, but while they're cutting or when they finish their cuts, the 10-year yield is rising because inflation expectations are rising. So that's something to watch for. Again, a steepening yield curve and both short and long-term yields rising. But more necessarily, short-term yields flat, 10-year yield, long-term yields rising. And another way we can look at inflation expectations is just look at TIP versus TLT there at the top. So perhaps that put in a bottom in June. I mean, those top two charts are starting to tick up a little bit. I just saw a news headline on Google that the New York Fed said inflation expectations have been rising since June. So we'll see. Now, lastly, I think what's significant for silver with respect to gold is the 1420 resistance in gold. Now, I'm rounding up here. If you go back to 2013, you can see that after gold crashed down to 1200, its first rally made it up to about 1418. Now, this is in daily closing terms. So we can just round up to 1420 and say that's a significant level. So there's a huge open space between 1420 and then like 1525 to 1550. Now, there was a little bit of a rally there in May, which you can see, but that's really the only trading that's in between that gap. Even though it's not a gap, let's call it a gap. But anyway, 1420 is significant daily resistance for gold, and gold's been consolidating after today. It looks like you can say it's building a bullish flag. So if gold closes above 1420, we could see some real momentum build in precious metals, and capital would probably start to flow to silver in that case. So in the very short term, that's something to look for. That would be bullish for silver. Gold closing above 1420. Now, if we're thinking several, couple months to 4, 5, 6 months down the road, rising inflation expectations is what silver needs to get going, and a decline in the dollar. That's all for this video. I hope you enjoyed it. You can follow all of my work at thedailygold.com. You can go there, opt in for my free book. It's over 100 pages of my best research, absolutely free. Just go to thedailygold.com, opt in there. You can also consider subscribing to my premium newsletter. It's $150 for 6 months, where I focus on market timing and stock selection. If you want to know which are the juniors that really have the goods and the best potential, sign up for our service. Again, thank you so much for listening and watching this video. I look forward to publishing another update for you guys in the days and weeks ahead.